Hey everybody, it is time for this week's Real Talk episode. We are talking about what's happened in the Northern Virginia real estate market in the last 7 days in probably around 10 minutes. And this week we do have a bonus because we actually have the numbers in for June of 2026, so we can compare those to June of 2025 to see what the market is doing. So it's going to be a great episode, so stay tuned and be sure you watch the whole thing. So as we're talking about the market snapshot, let's just kind of go into this a little bit. The snapshot is a 7-day market review. We are looking at lead measures. We're looking at properties that came on the market. We're looking at properties that went under contract. And the reason we're looking at these measures is because it gives us a supply versus demand ratio so that we know what to expect real time when we're out in the market looking at properties and seeing what's going on. So it prepares our buyers to know what kind of competition they may be facing, and it helps our sellers understand and what to expect with regards to offers so that they can strategically price the property and so on. So we look at those measures with our 7-day report. Then once a month, we look at the month over month to get a bird's eye view to see kind of what the trend is in the market. Now, why do we not use the month over month for real-time decision making? The reason for that is when we're looking at the month over month, we're looking at properties that have been on the market or that went under contract throughout the month of June of 2026. So that closed the month of June 2026. So if a property closed on June 1st, 2026, that means it probably went under contract on May 1st. So that June 1st closing, we are now on July 10th when I'm shooting this video. So that June 1st closing, number one, it's already 40 days old because it's all of the month of June plus 10 days in July. Plus it's 30 days old from the time that it took to actually settle from when it went under contract. So that's actually telling us market activity from May 1st of 2026. That's 75 days old. You cannot use that information to make real-time decisions when you're out looking at properties and making decisions today. So that's why we do the 7-day to give us real-time information. Then we use the lag measures to give us a broad overview of what is happening in the market and what the what the trends are as far as what the market is doing. All right, so that's the difference. Let's dive into this and see what's been happening. Okay, so keep in mind that as we're looking at today's numbers, we are looking at what happened over July 4th weekend. So you can see that you had a significant drop. Our black line here is the buyer activity, and our teal line is the seller activity, or the inventory versus the supply. Demand versus supply. So you can see that. We had a significant drop of both buyer activity and inventory over the July 4th weekend, which is typical and which is what we expect. You can see that happened last year as well. You can't see it here because I cut that week off, but you can see that they were at a low point when it happened, and then we went into the next week. You can also see this is where we were last year at this time, and this is where we are now. So we're a little bit higher on inventory, about the same on buyer activity. So what does this mean for supply versus demand? Well, if you look at the trend here, you can see that we moved a little bit more into a buyer's market for that July 4th weekend, which we expect because the buyers were gone. So that meant there was much less competition, there was more inventory on the market, so buyers had options. So what's going to happen in the next 7 days now that we're outside of the July 4th weekend? Well, we'll probably see a pretty large uptick of inventory, just like we did last year, and we'll see that buyer activity start kicking back in again. So, we will see the market start picking back up again, but it was definitely an opportunity this last weekend for those that were in town. So what did contracts look like? Let's see what the actual contracts were looking like. So we're looking at 261 contracts. So there's still a lot of contracts that happened over that time frame. This is from June 30th to July 6th, so that includes the July 4th weekend. We're looking specifically at Northern Virginia. You can see that contract price-wise, 33% went above asking price, 23% went at asking price, and then 44% went below asking price. So this number got a little bit bigger over the weekend, which again, we expect because there was less buyer activity. Days on market, we had 29% of the properties went under contract in the first 7 days. 37% of the properties went under contract within 21 days, between 14 and 21 days. I'm sorry, 8 and 21 days. And then 34% went over 22 days. So notice this, only 34% in this past week went over 22 days, but 44% went under asking price. So that means that the sellers were negotiating. There was a little bit of some negotiation that was happening, even if the property had only been on the market for less than 3 weeks. We'll see if that trend continues. Contingencies, how many protections, or what were the protections that the buyers were getting? You can see that about 69% did get their finance contingency, 63% did get their appraisal contingency, and 60% are still getting their inspection contingencies. So the vast majority of buyers are getting all of their protections in the contracts. Now, there's still, on those competitive markets, you're still 40% that are going without inspections, and 30% and 37% going without the other contingencies. But chances are pretty strong that the ones that did not have the inspection contingency, if it was a competitive situation, the vast majority of them probably did a pre-offer inspection. So they still got their inspection, it just was not in the contract. Same thing with your finance contingencies and your appraisal contingencies. Maybe they were already fully pre-approved. They had a POFA, pre-offer full approval. And then some didn't have appraisal concerns. So basically, the buyers are getting their protections, which is fantastic news for buyers. Financing versus cash, 83% were finance, 17% were cash. The 17% could make up a part of that appraisal contingency not being in there as well. Seller subsidies, 18% of the contracts had a seller subsidy from the seller to the buyer. And then this is an important number, 95% of the contracts had buyer agent compensation included. So what do all these numbers mean? Basically, buyers, the market is pretty fair right now. Prices are not coming down. You're going to see that when we do the monthly market report. Prices are still going up, but the market is more fair and buyers are having their protections in their contingencies, and only a quarter of the properties went over asking price, which is fantastic for buyers. And those are only going to be the properties that are perfectly prepared, priced appropriately, their condition matches what they should be. So basically buyers have choices, but there's not a lot of lowballing going on. So buyers need to be realistic with that. Sellers, it's still a strong market for you. It is still overall a seller's market. Prices are still going up, but you do have to present, you're in a competitive situation, so you have to listen to your agent and do the repairs, get the property prepared, get it staged, get it, the paint done, get these things done. There are certain things that you can do your property that have a great return on investment. Be sure before you do anything to the property that you talk to an agent that really knows what gets you a return on investment, because you don't want to put money into a property that you don't need to. Also, sellers, you need to be prepared. 95% of the contracts had sellers offering to contribute to the buyer agent compensation. So you need to be prepared for that. It's always negotiable. You don't have to, but if you decide not to contribute to that buyer agent compensation, there's a strong chance that buyer is going to go to another property where they will help them cover their buyer agent compensation. And keep in mind that on this week's contracts, we had 80% that were at 2.5% or higher. So just be prepared for that. Again, it's fully your choice. It's fully negotiable. It is a part of the terms of the contract, but just be prepared that that is going to probably come down the pipe at you. Okay. If you guys have any questions about this, please feel free to let us know, and we will be happy to sit down with you, go over your situation, see what might work for you and what a good strategy would be for you, whether you're buying or selling in this market, so you understand exactly what's going on. You can reach out to us at 703-783-2143. Okay, so now let's dive into the month-over-month stats. Again, month-over-month stats. We look at this because we want that bird's eye view of the market. We want to be able to see what is actually happening in the market and what the trend is. With our market snapshot, we're looking at what's real time. With the bird's eye view, we're seeing where the market is trending. So as we dive into this, keep in mind this is all lag data. This is sold data. So this data could date back to what was happening in the market as far back as May 1st. Of 2026, so it's not something you want to use for real-time decisions, but it does give you the trend of what's happening in the market. So what are we seeing? Number of listings was up 3% from June of 2025. Number of sales was up 5.6%. So what does that mean? That means the inventory went up 3%. So the market activity overall is higher this year than it was in 2025, June of 2025. The inventory went up 3%, but the sales went up 5.6%. The sales almost went up double, which means that it's a stronger market for sellers because those buyers are out there and they're buying the properties. So that's what this comparison gives us. Days on market, it was actually up a day from June of 2025. So it was 20 days June of 2026, and it was 19 days June of 2025. Pretty irrelevant, but it just means that properties are still selling for pretty quickly. Months of inventory, this is really important. Even though we have higher inventory, our months of inventory actually came down a month in 2026 versus 2025. You can see that right here. We were at 3 months and now we're at 2 months. The first time we've hit 2 months in over a year. It was May of 2025, last time we hit 2 months. What does this mean? This means that if no new properties came on the market and the same buyer activity continued, how long would it take for us to sell out of this inventory completely? It would take us around 2 months. Anything under 5 months is considered a seller's market. So 2 months is a strong seller's market. 5 to 6 months is considered a normal market. 6 months and above is considered a buyer's market. So this just tells us that supply versus demand ratio. June was an aggressive month as far as demand on properties here in Northern Virginia. What did the median house price do? You can see it went at $814,400 from $770 in June of 2025, a 5.5% jump in June year over year. So that's telling us that strength of the buying activity that we're seeing. We're seeing prices are still going up. We're seeing actually strong appreciation in June of 2026 versus June of 2025. Again, this is specific to the Northern Virginia market. You're probably hearing news out there that the housing market is down and so on. That does not matter. What you have to do is look at where you are and where you're looking to transact and know exactly what's going on. So what does this median house price mean? We were looking at the trends of this, but it's something, it does not indicate market value. And there's a difference, and I like to go over this every couple months just to remind everybody what we're looking at. So we're gonna look at the median house price in this very, very simple example. Median house price is the number that falls right smack dab in the middle of your entire data set. So it's not the average, it's not, there's no calculations, it's just the number that falls right smack dab in the middle. And the reason they use that is because when you have a large data set, you don't want really, really high sales to skew the number or really, really low sales to skew it in that direction. You want to get an idea about what was in the middle. Okay, so let's look at this example. Month one. We have 3 million all the way down to 220,000. You can see the median sales price is right here, $500,000. Okay, so that's month one, $500,000. Month two, you can see all of these numbers are higher than these numbers, and you can see all of these numbers are higher than these numbers. But the middle number that fell right in the middle is $400,000. Okay, so if you're listening to the media, if you're listening to statisticians, if you're listening to what's going on, you know, how this is presented, they're going to say that house prices are down 20%. Now, what does that mean to you? What does that indicate to you? That would mean to me, that means I can go and buy what was a $500,000 property for $400,000 now. That means the market's crashing. That means we're in a great opportunity. But you can look at this data set and you can see that there is no evidence of the prices coming down. The whole point of me showing you this is to say that the median sales price does not tell us market value of properties. It tells us where the shoppers were and where they bought in the middle. So we've seen periods where median sales price would come down $100,000, but that was because the interest rates had gone up, buyer activity was up, market values were actually up, but buyers had to look at a lower price point because of those interest rates going up. So property values were not going down, it's just buyers had to adjust to a lower level. Those property values were still going up. So you have to look at the whole picture, not just median sales price. I don't want to beat a dead horse, but I want to go through that with you real quick. Okay, so what does this mean? What's the trend that we're seeing? June 26 versus June of 2025, we saw market activity was up, both inventory and sales activity. We saw that we are in a seller's market because the months of inventory was 2 months, so it's 5 months or below, so it's a seller's market. and we saw that we had increased appreciation, not even just normal appreciation. We had a 5.5% appreciation. So that tells us that it's a strong market, lots of activity, and that's what you need to expect and be aware or be prepared for. Some people are still kind of waiting for the bubble to break and waiting for the market crash. Show you just a little bit of a documentation here. You can see this is up until 2023, so I don't have the new numbers here, but we know 2023 to 2026 have all been appreciation. In that time frame, it was an 81-year period. There were 73 years where the market was up. It could have been 0.5%. It could have been 20%. The market was down 7 years. Same. It could have been 15%. It could have been 1%. And the market stayed even 1 year. Okay. These 7 years, the important thing to look at is we had the 1990-91 recession. It was down a total of like 1%. And then we had the 2000s, the housing crisis. That was 5 of the years of the 7. So those are the only years that the market has finished down. If you look here, you'll see the market has never had a down decade. So for those of you that are waiting for a market crash or a market correction or housing prices to go back to a certain number before you jump into the market, history shows that that is a mistake, because what happens is you're sitting there and prices continue to go up. For example, we saw today that the median house price was $814,000 versus $770,000. So those house prices keep going up, so it's just costing you money. And even if there is a slight correction, the biggest correction we see on this graph was 12%. If you sit on the market for a period of 2 to 3 years while the market's going up 4% each year, you're at a net loss, you're at a net, and that's only if you happen to hit the 1 year, the biggest drop in market value history. So if you're on the fence, you're waiting for a market correction, you may want to talk to somebody, just kind of go through these numbers and see if it makes sense for you to make a decision to move forward now, okay? So all in all, it's a great market for sellers, great market for buyers right now, as we showed you on the market snapshot. And if you guys have any questions, please feel free to reach out to us, 703-783-2143. We'll see you guys next month.